With Bitcoin prices approaching their previous all-time highs, I thought this video would be a perfect opportunity to discuss why this time is different from the last, what I think is the difference maker from the run back in 2017 to the run today, and we'll discuss a little bit about what the future of cryptocurrencies has in store. My name's Nick, welcome to Ways of Wealth. This is week 47 of the market recap. If this is your first time here, we highlight key events that are happening in the market. So I'd like to ask you a huge favor before we start. If you get some value out of the video, if you learn something new, do me a favor, hit the like button. It definitely helps my channel out. And if you haven't already, hit that subscribe button, turn that notification bell on. We do this every single week. First off, if you're not familiar with what Bitcoin is, it's definitely going to be a little bit more intricate of what I explained today. Today is going to be just a base and ground level, but what it is a digital currency, meaning that there's no paperback, there's no coins, and it primarily revolves around the internet and blockchain technology. It was created back in 2009 and it stems from the 08-09 housing crisis. And it's still a mystery today who the creator of this technology is, but a lot of people refer to this person as being Satoshi. And again, we're not going to go into too much detail about how it works, but we're going to talk about the theory behind why people are flocking to cryptocurrency. And we'll break down a few reasons why this could be a potential win in the coming years. Reason number one. The Bitcoin is not controlled by a decentralized authority. This is something that heavily affects the US dollar and the Canadian dollar because they are tied to the Federal Reserve or the Bank of Canada, and any policy changes that are made, much like the stimulus that is going on today, reflects in the purchasing power and the value of the hard paperback currency that we're all used to today. Well, Bitcoin doesn't have this problem because it's not attached to anything there. And obviously one of the biggest elephants in the room is how much stimulus has actually been pumped into the economy. And let's be honest, there's still a lot to go. So it is actually ruining the purchasing power of the US or Canadian dollar. And Bitcoin doesn't have this connection. The second reason revolves around blockchain technology, and it has a two-pronged benefit. The first part of the benefit relies in the instantaneous settlement, meaning that I can send Bitcoin to anybody in the world right now and they would receive it right now. Whereas before, you used to have to go to a bank, do a wire transfer at a fee, and that would still take 24 to 48 hours, depending on business hours as well. And then don't forget about the currency exchange, where the bank is also profiting and charging a fee in that side. So the transaction costs on Bitcoin are much less, and obviously it is instantaneous, it's right away. And the second benefit is the security of the blockchain in preventing hackers or anybody from stealing money. The openness of the network allows for people to have many different checkpoints to see if there's any flaws or anything wrong. And that part is obviously very vague, but if you do a little bit more research, you can learn a little bit about the security protection behind the blockchain technology. I would say the biggest concern right now is how the government is going to regulate this cryptocurrency moving forward. And obviously one of the other risks is that there's thousands of different cryptocurrencies on the market right now. Who's to say that Bitcoin is the one to prevail? So I've gone to the internet to see what the quote unquote smart money thinks about Bitcoin. And I was actually surprised with what I saw. There was actually more hedge fund bulls than I saw bears. Obviously you have your old souls that aren't quite sure of what the technology and what it is moving forward. People like Warren Buffett, who has been a big naysayer. You even have somebody like Jamie Dimon, the head of JP Morgan, bashing or not so confident in Bitcoin, even though his own firm has their own cryptocurrency. Stan Druckenmüller, a hedge fund manager and CNBC contributor, has recently come out and stated that he has changed his opinion on Bitcoin and he thinks that it's a store of value. He says that there's a lot of millennials and a lot of West Coast or Silicon Valley money behind it, and it's still got a long way to go. Paul Tudor Jones, another hedge fund manager, was surprised to see the amount of intelligent people who are behind Bitcoin, who are supporting it. And he thinks that we're only in the early innings of what this could potentially be. This to me seems like the difference maker. The hedge fund, the institutional money that is flowing into this bull run is much different than it was back in 2017. That was run by the retail investor. And even if you want to look on a short-term basis, for the past month and a half, Bitcoin has actually been outpacing gold. One of the biggest challenges right now with Bitcoin is determining what its value is, what its current value is, what its future value looks like, and with or without government intervention. And my research brought me to Cathie Wood, a very famous Bitcoin bull and the head of ARK ETFs. They specialize in disruptive technology, and the way that they are valuing Bitcoin in the future is by looking at mobile payments today. They start with China, which is the global leader in mobile payments. Over 90% of all mobile transactions take place in China. This is because the infrastructure of the banking system wasn't really like it was in North America or in Europe. So it provided that opportunity for the disruptive technology, something new, something different, set the stage for Tencent mobile payment really to step in. Well, they did about $24 trillion in transactions last year. And Cathie even thinks that this is a better indicator of GDP, which was $14 trillion. As you know, GDP only takes into context the finished good price, so it only looks at what the Apple phone cost the consumer at the store. It doesn't actually take into consideration for paying for all the components that go into it, whether it's the semiconductors, the glass, the metal, the plastic, etc. So it actually gives you a better indication of how much money and the velocity of money that is moving around your economy. So there's a couple similarities at play. There's how fast the mobile payment market grew in China. And if that does happen in the Bitcoin mobile payment here, what the vast, endless opportunity is there for the cryptocurrency. So that is definitely one of the things that I've been looking at. And I would definitely suggest, if you are very interested in the topic, to go look at some of Cathie Wood's podcasts. She's done one with Anthony Pompliano. She's also done a few lectures on Bitcoin and cryptocurrency. I would definitely suggest going to check those out. The best piece of advice that I've heard so far is from Chamath Palihapitiya, where he stated back in February that everybody should have a 1% allocation in your portfolio to Bitcoin. Chamath thinks of Bitcoin as an unrelated hedge, meaning that it doesn't move in the same way that the market moves. So when the stocks are tanking, the Bitcoin will hopefully be a store of value, something that doesn't depreciate. And from there, he says you quietly build up your position and maintain that 1% in your portfolio. You keep it under the mattress and you hope that you never have to use it. But if you do, it will be there to protect you. The way that I've been getting exposure to Bitcoin is not by holding Bitcoin directly. I still have a lot of questions personally myself about where do I buy it and where do I store it. I think the best way for me to play it is a fund that trades on the Toronto Stock Exchange. I believe it was one of the first of its kind. The ticker symbol is QBTC.TO. It trades in both Canadian and in US dollars, and it tracks the underlying price of what Bitcoin is. The management fee is relatively high. I think it's around 1.8 to 2%. And this is because of the insurance premise that they need to have insurance in case there is any threat of loss so that the fund can repay the investors. So I'm personally still trying to figure out whether it's better for me to hold the fund QBTC or if it's better to actually hold Bitcoin directly. So that's something that I've been working on a cost basis to see how much it's going to cost me. Am I capped out on any potential gains by holding the fund. So that's obviously what I'm doing on the side to figure out what's the best for me moving forward. I would definitely suggest for you to figure out what's the best for you. I also got some news that there will be another IPO in December for Galaxy Investments. It's a company that's run by Mike Novogratz. He is a huge Bitcoin bull. This is going to be listed on the Toronto Stock Exchange, both again in Canadian funds and US. So you have the opportunity at both depending on what currency you want to invest in. And that ticker symbol is BTCG. There's also one in the US that Kathy Wood uses, which is GBTC. It's grayscale. So I would look into that if you're looking for an OTC or over-the-counter market play in the US. The case for cryptocurrency moving forward makes so much sense to me now after doing the research. Obviously, the risks involved is which one is going to be, the most prominent, which one is going to take the lead from here. Will it be Bitcoin? Will they maintain their dominance moving forward, like a first to market type presence? Or will it be several different ones? There's obviously Ethereum, which is following this bull run that Bitcoin is enjoying right now. But that's why I think going back to Chamath's advice of having a 1% allocation makes the most amount of sense. I mean, for me, it's not really that much money over a long period of time. When I'm 6 years old, will I regret not investing that money? Even if it goes to zero, it seems like complete sense to me. Just have a 1% allocation in your portfolio, but obviously do your own research, do what's best for you. To have something where that could go to another bill or debt or something like that just depends on your current financial situation. And I'm not a financial advisor, and I don't know your particular situation. But if you do have a portfolio of investments, I would definitely suggest doing more research on crypto or Bitcoin itself. And that's all for this week in the market recap. I hope you guys enjoyed the video. Again, I'd like to ask you, if you made it this far, you got some value out of the video, you learned something new, smash the like button. Let me know down below what you think of cryptocurrency. Do you hold it? Are you selling right now with the bull run? Or are you buying more? And definitely, obviously, if you're still here, hit the subscribe button, turn the notification bell. We do this every single week. I look to provide you guys with new value and what I'm personally working on. I hope you all have a great week in the markets. Happy trading.